Bond yields continued to climb this week as it became ever clearer that the Fed is committed to fighting inflation by raising rates, perhaps by half a percentage point going forward. The Fed's first rate rise since 2018 took place in March, and it was a quarter point. The average fixed-rate 30-year mortgage is now 4.9%, a four-year high. The era of quantitative tightening has arrived, and while markets were down overall, tech stocks were hit particularly hard. In this edition of Commerce Code, is crypto a pathway to better loyalty programs? A conversation with David Crystal and Peter Schultze of Augeo. Dan Carell here, and this is Commerce Code, brought to you by DCA, the Digital Commerce Alliance. Thanks for joining us for insights into the evolving world of digital commerce. The Wall Street Journal reported Wednesday that major banks, reportedly including Wells Fargo, JP Morgan, US Bancorp, and others, are considering extending the use of Zelle payment service from money transfers into the retail space, allowing consumers to use Zelle at the cash register. Journal reporting suggested that the banks don't agree on whether this is the right move, but a move of this kind would give them more power in their relationships with Visa and MasterCard. There is, as always, a lot of cryptocurrency news this week. Elon Musk's quick trip onto the Twitter board could affect not only the future of Twitter, but potentially the value of his pet cryptocurrency, Dogecoin. Bitcoin may be getting its own stablecoin, an asset-backed currency designed to be less price volatile that still runs on Bitcoin's backbone. Plans for this innovation were announced by Lightning Labs, which announced this week a $70 million funding round for the project. If it succeeds, a move like this could not only reduce price risk, but ease the logistics of making payments on Bitcoin rails, presenting a potential challenge to credit cards. Finally, DCA member FIS announced this week that its WorldPay business will give merchants the ability to receive settlements in USD coin. USD coin is a stablecoin pegged to the US dollar. FIS will do this in partnership with Circle, the fintech that issues USD coin. With all that crypto news this week, it's fitting that today on the show we'll be exploring the intersection of cryptocurrencies and loyalty programs. I'm talking with DCA board member David Crystal, the CEO of Augeo, and Peter Schultze, the vice president for crypto loyalty at Augeo. We'll be discussing Augeo's product called Heaps, a loyalty program that allows loyalty points to be redeemed for cryptocurrencies. David and Peter, thank you so much for joining us today on Commerce Code. Where are you each joining us from?
Hey, Dan, this is David. It's great to be with you again. I am in St. Paul, Minnesota, but as excited as I am about our city and state, I defer to Peter because he's in a way more fun place at this moment in time. So, Peter, where are you?
I'm Peter Schultze here. Thanks again for having us. I'm actually at the Bitcoin conference here in Miami Beach, so getting a lot of sun this week, which is nice.
I am in a cold place as well, not far whatsoever from David. And so, Peter, we're both jealous. We're excited that you're there. That's a lot of fun. Well, look, let's dive in because we are going to be talking about some really interesting and cool crypto stuff. David, can you just give us some quick background on Augeo?
Augeo is one of the leading engagement technology platform companies in the world today. We support engagement, recognition, loyalty solutions across the entire corporate enterprise. Among the things we've gotten, I hope, better at are incubating big ideas. And we've done a fair amount of that work over the last decade or so. And most recently, the one that we're most excited about, of course, is in what we're calling crypto loyalty. And the way we got into this is we were approached by a number of different clients probably about a year ago. Across our platforms worldwide, we do many millions of dollars a month of loyalty points and other sorts of currency redemptions. And we were asked by these clients, do you have a solution that enables redemption for crypto? And so we looked around the market. We saw a number of organizations that had more of a crypto mindset versus a loyalty or an engagement mindset. And we concluded we can do this on our own and develop our own solution. So we're excited to talk to you today about what that is and why we think it's such an important thing, not only for our loyalty industry, but certainly for Augeo.
And David, for you to go down this path, for anybody running a business, there's a dozen things you could do today and you got to decide on the one or two. So you must have a point of view on crypto right now that kind of informed your decision to say, hey, this is really worth our time. What's your kind of point of view on crypto in 2022?
Totally. So when we think about crypto NFTs, basically the exchange of digital assets in all of its forms, this sort of exchange can sit at the core of a broader engagement. From our perspective, crypto and digital assets, digital currencies in general, are all about forming new communities, creating new ways to connect. What we're seeing in general about the crypto space is that adoption and awareness is way up, but this does not mean that there is mass adoption. In 2021, cryptocurrency adoption grew by more than 800%. So we know it's not going away at this point. That's the good news. The questions that matter most to us are about scale and mass adoption and what new fields, for example, could crypto transform where we live, where we work, where we play, and so on and so forth. So it's here to stay. And as it goes more mainstream, we want to sit at the center of that in the world of loyalty.
It's such an interesting story when you talk about rate of adoption, but percentage of people that kind of still haven't gotten involved. It makes me think of the first time I ever saw an internet browser, because it seemed to me an exotic thing that few people would have ever done. But then I don't know, it took what felt like 5 minutes for it to be ubiquitous. And so I think we're all wondering whether crypto goes that direction or maybe not as big as that, right?
Totally. I mean, I think we're all wondering, is there going to be an iPhone moment for crypto?
So, Peter, you are, as I said in the introduction, VP of Crypto Loyalty there at Augeo. So I want to get your perspective on how cryptocurrency and other digital assets, how are they intersecting with loyalty in particular and consumer engagement? How are you thinking about that right now?
The exciting thing for us is that, all this really incredible growth and interest in cryptocurrency and digital assets from our perspective has created new opportunities for organizations to really drive deeper engagement with their customers, their employees, their members. So our thesis at Augeo really is that rewards create an easy entry point into cryptocurrency for both consumers and organizations. The interesting thing is that folks typically treat rewards differently than their hard-earned paycheck or their disposable income, where they may be more willing to enter the space and to start learning and experimenting with the space. The really interesting thing is that we're seeing this demand and this interest in crypto already impacting engagement in a really meaningful way. Our Bitcoin rewards are really moving the card to the top of the wallet and impacting spend. And we see not only opportunities on the cardholder side, but across the board, crypto and digital assets can really play a role in terms of connecting people, of creating educational opportunities, and so forth.
Peter, super interesting observations about people's behavior around both loyalty and crypto. I would love to hear a little bit more about Heaps, which is, I think, the name for Augeo's crypto loyalty platform. Can you tell us about that?
It is the growth in crypto we're seeing combined with, the deep foundation we built in loyalty and fintech ultimately led to the creation of our own strategy and product around crypto. So in its simplest form, Heaps is a crypto platform that enables the exchange of loyalty points, cashback rewards, and other loyalty currencies into cryptocurrency. So Heaps is designed to essentially plug into any new or existing loyalty or rewards program. So where a consumer or a cardholder or a member, even an employee, can convert the rewards that they're earning into leading cryptocurrencies. The interesting thing is once they're inside the platform, we're providing education around the basics of crypto and blockchain, as well as understanding the risks and the benefits that come along with investing in crypto.
Peter, this is a super rookie follow-up question, but if I'm wondering it, maybe some other people are too. I'm assuming giving the unit price of something like Bitcoin, you have a way to easily and efficiently do fractionalized purchases.
Absolutely. Yeah. So everything can happen on a fractionalized basis. And the interesting thing too, and the approach we've taken is that we're also providing users with their own individual wallet. So we're giving them the ability to buy, sell, hold, and transact with cryptocurrencies when they're inside the platform, whether that be a recurring deposit that's, even as small as $5 or $10 each week, or they can even decide to allocate a portion of their paycheck into Bitcoin. And everything is safeguarded through best-in-class cold storage through our partner Prime Trust. The piece that's really unique to what we're building that I wanted to touch on is our marketplace. So we're actually building out an expansive marketplace of popular digital gift cards, plus thousands of online and in-store offers where every time a user, a cardholder, or member shops at a participating merchant, we'll actually reward them with free crypto. And the reason we're doing this is, number one, creating ongoing ways for consumers to build portfolio value, as well as more ways to inspire ongoing engagement with the card or with brands of the partners that we bring on.
Peter, this is such interesting stuff, and I have 14 follow-up questions that I'm not going to ask. So I'll just put it this way. I see some obvious potential benefits for organizations in this, but I'd love to hear, your thoughts and David's thoughts on one or two. But also, What are some of the risks that we should be thinking about, that organizations should think about as they consider participating with a program like this?
Clearly, there is risk. Think of the organization and their constituencies, whether they're employees or in particular cardholders or customers, and the risk that comes with lack of understanding or quote unquote investing, in this instance, in cryptocurrencies or NFTs or wherever the market may take us. So at the organizational level, most large brands and financial institutions are risk averse. Yet there's this sense that there's an inevitability that crypto, blockchain, NFTs in all forms of engagement and transactions are going to play a role. So then the question is, how do you get into it? And it's just to accentuate something that Peter shared. Primarily, when we go out B2B to an organization's consumers or employees again, it's important that we are not advocates. So to educate and not advocate is a really important way to sort of manage the risk at the organizational level from our perspective. At the individual level, same thing. This is the digital exchange of value. We were at the DCA conference last week on crypto, and one of the themes that laid out was that the internet historically is representing an exchange of information versus what is today through blockchain, the digital exchange of value. Lastly, from an NFT perspective, even though that creates risk today to put NFTs out there as a redemption item for loyalty currency, we think there's a huge motion in that direction. This is sort of like the digital scarcity for fully digitized objects like Bitcoin. In our view, NFTs are becoming increasingly more mainstream in terms of traditional contracts, concert and sports tickets. It's coming. And what's enabling there are these new blockchains or these layer 2 solutions that are enabling sort of lower transaction fees. We actually think this is going to come in scale very rapidly in the next couple of years.
Peter, do you have an angle on risks and benefits?
The only thing I'll add from a technology standpoint is to bring this platform to market in a way that can scale securely. We work with many FIs and Fortune 500s across our business units. So, obviously regulatory compliance considerations, security considerations are number one. And so the way that we're bringing this to market, we've brought on a partner, Prime Trust. They're a licensed regulated trust company and one of the leading crypto infrastructure providers globally, to power the custody and the trading functionality behind our platform. So it essentially means that brands and organizations we partner with to roll out crypto rewards don't have to worry about the licensing, the compliance, the security considerations. It's truly plug and play, in that sense. And then from an asset perspective, we're focused around 5 to 10 leading cryptocurrencies to ensure that what we're offering has been vetted and established in the marketplace, done our best to make sure that this is a solution that's easy for enterprises across the board to onboard into cryptocurrency.
Great. Gentlemen, this has been a tip of the iceberg kind of conversation on an issue that I know we'll see much more of. I am really looking forward to seeing what happens with Heaps there at Augeo and with cryptocurrency broadly over the coming months and years. And so thanks for joining us today, and I'm sure we'll have more conversations in the future.
Thanks, Dan.
Thanks a lot for having us.
I'm basically a card-carrying, Chicago school Milton Friedman free market believer. In the long run, markets are efficient, and on average, people are pretty good at being rational. I should say that I don't carry an actual card anymore, but I've got one in my digital wallet. So I'm open to changing my ways, and Chicago school folks like me have been forced to amend our views in the last couple of decades, in particular on the question of how rational people really are, even in large numbers, and even on average. Sometimes, even the most rational person will look at two things that are functionally identical and treat them pretty differently. I thought of this when Peter mentioned in our conversation how people behave differently with loyalty points, and that may lead consumers who might not spend their own money on cryptocurrency to be more willing to do it when they're using loyalty points. Of course, if they're using their own loyalty points, they're still theirs, and these days, they're often as good as money in many ways. But people feel differently about loyalty points. So many of us behave differently with points in a loyalty account than we would with money in our checking account. These are the kinds of insights that the authors of Freakonomics are famous for, showing us how we're not as rational as we think. As we get close to tax day in North America, there's a stark seasonal example of this: tax refunds. Those interest-free loans we give the federal government, they arrive in the bank accounts of about half of taxpayers, and they're spent more readily than other identical dollars that didn't just spend an average of 6 months in the government's coffers. Behavioral economists will continue to debate exactly why we do this, treating $2 differently. In the digital commerce and loyalty businesses, it might not matter why. The fact that people take more risks or spend more loosely when they can pretend in their mind that the money they're using is somehow found or free, that's a potentially powerful behavioral insight, especially when we're asking consumers to do something new, like jump into cryptocurrencies for the first time. To find out more about the latest trends in digital commerce and digital advertising, check out our website, www.digcomall.org. That's www.digcomall.org. For the Digital Commerce Alliance, take care of yourself and take care of each other. God bless. This is Dan Carell, signing off.